In the intricate landscape of real estate investment, discerning the optimal balance between risk and potential returns is paramount for investors. This narrative unfolds 6 strategic pathways tailored for those inclined towards minimizing exposure, while aspiring for appreciable gains, each distinguished by its operational framework and suitability for various investor archetypes. We commence with an exploration of real estate crowdfunding, a modern conduit that democratizes access to real estate projects through digital platforms. This strategy is celebrated for its capacity to amalgamate investments from a broad spectrum of participants, effectively mitigating the risk for individual investors by dispersing it across a wider base. Crowdfunding not only lowers the entry barriers, making real estate investment feasible for smaller investors, but also cultivates a sense of community and shared success among contributors, ideal for beginners or those with modest capital. It embraces a communal investment ethos, promoting collective decision-making and risk-sharing. Progressing to real estate syndication, we uncover a collaborative investment model where individuals pool resources to secure substantial properties, typically beyond the reach of solo endeavors. This approach allows investors to partake in high-value real estate opportunities without shouldering the entire financial load, accompanied by the advantage of professional management to oversee the property. By distributing risk among participants, syndication shields individual investors from the full brunt of financial exposure, presenting a fortified stance against market fluctuations. Tailored for investors ready to commit more substantial funds, but preferring to sidestep day-to-day management, syndication serves as a gateway to diversifying portfolios with significant assets under a shared ownership model. The narrative then shifts to the BRRRR method, an acronym for buy, rehab, rent, refinance, repeat. This comprehensive strategy encapsulates a cycle of purchasing underpriced properties, enhancing their value through renovations and leasing them. The subsequent refinancing phase is designed to recoup renovation expenses, thereby liberating capital for future investments. This method's allure lies in its emphasis on value addition and sustained cash flow, making it a compelling choice for hands-on investors with a robust grasp of property renovation and management. It's a strategy that resonates with those dedicated to a long-term investment journey, focused on accumulating wealth through property and equity growth. Exploring further, we delve into real estate investment trusts for EITs, which offer an avenue to engage with real estate portfolios without the complexities of direct ownership, publicly traded on major stock exchanges. REITs provide a fluid form of investment, distinguished by their mandate to distribute a significant portion of income to shareholders. The inherent diversification and income generation capabilities of REITs position them as a lower-risk investment, attracting individuals seeking steady returns without the entanglements of property management. Particularly appealing to retirees or those with an income-centric investment philosophy, REITs embody the convenience of liquid assets coupled with the allure of regular income streams. Airbnb arbitrage introduces a novel strategy that leverages the disparity between long-term leasing costs and short-term rental revenues. By renting properties for the long term and subletting them on platforms like Airbnb, investors can exploit high-demand locales to generate substantial returns without the financial commitments of ownership. This model's reduced risk profile, predicated on minimal ownership liabilities, aligns well with entrepreneurs adept in the nuances of the short-term rental market and proficient in crafting appealing rental experiences. Finally, HouseHack Short-Term Rentals presents a dual property strategy for homeowners aiming to diversify their income. By engaging in short-term rentals, either through acquiring additional properties or optimizing their primary residence, investors can cultivate multiple streams of income. This approach minimizes financial vulnerability by distributing risk across various properties, ideally situated in high-demand areas to ensure consistent rental income and property value appreciation, suited for homeowners versed in the dynamics of short-term rentals. This strategy offers a pragmatic route to real estate investment with minimal disruption to personal living arrangements. Collectively, these strategies unfold a spectrum of low-risk investment avenues in real estate, each tailored to different investor profiles and objectives. From digital platforms that democratize investment to methods that leverage property management and renovation skills, The landscape is rich with opportunities for cautious investors to navigate the market with confidence, aiming for sustainable growth and minimized exposure.